Good afternoon from Los Angeles and happy Wednesday. It's Alyssa Corum and Ken Shreve here, reporting to you live from our newsroom. And on today's show, we're going to be taking a look at Apple as well as Alibaba and Zoom, a hot IPO on the market. But before we get to all that, we're going to take a look at the major indexes. Some selling heading into the close. The Nasdaq finished down about 0.6%. So did the Dow. The S&P 500 took a slightly harder hit, down 0.75%. The Fed coming out with its latest policy statement. So what was behind this selling heading into the close?
Well, I was talking with Ed Carson about this just before we went on air, and it probably has something to do with Fed Chief Jerome Powell talking about recent low readings on inflation being transitory. So there had been maybe some hope that the Fed could even cut rates by the end of the year. But when Powell is talking about, inflation being transitory, it sort of kind of puts off the table a rate cut and raises the likelihood of a rate increase at some point. So he talked about a very healthy economy, a robust jobs market, low inflation. So it's, I think the market got spooked a little bit, again, just with that term transitory. If inflation is only temporary in a healthy economy, it's only a matter of time before it could start to heat up, and then that puts a rate hike back on the table, and the market has a bee in its bonnet.
Yeah, well, we'll have to figure out the impact that the longer term impact that will result from this. We'll keep an eye.
Yeah, I mean, we had a fairly mild distribution day for the Nasdaq on Tuesday. Looks like we're probably going to get another one today. So I think for individual investors, just need to keep in mind that we're still in a confirmed uptrend. We're going to talk about some nice gainers that we saw today. That was really, another day of strong earnings reports, but market spooked a little bit by the Fed. So we'll see what tomorrow brings.
That's right. Always a new day. But let's check in with Apple. Speaking of big gainers on earnings, Apple gained about 5% in heavy volume after issuing its quarterly report Tuesday night. The report did show a slowdown in earnings and sales, but a little bit better than expected for the tech giant. iPhone demand is still a concern here. Apple increasingly relying on its services business. But all in all, it looks like investors were relatively happy with this report.
Yeah, I mean, earnings and sales did beat expectations. Earnings and sales, like you mentioned, did decline from year ago levels, but they were better than expected. And the company also gave pretty good guidance for the current quarter. So iPhone sales down 17%, not a big surprise there. Apple's sort of kind of figuring out what's going to be next after the iPhone. But you mentioned services, which is the App Store and Apple Pay and
iCloud
and
Apple Music.
Yeah, exactly. All the services. And that business was up 16% to $11.45 billion. So market seemed to like a lot more than it didn't like in the earnings report. And Apple closed near its low, got pulled down a little bit by the broad market, but still managed a decent percentage gain.
All right. So in recent weeks, we've been talking a lot about earnings gaps and how to handle stocks on their earnings. But along with that, when we're looking at stocks that are setting up heading into their reports, we like to look at stocks that have those strong fundamentals. And that's one piece of the puzzle that's really missing here for Apple, even though we're seeing pretty strong technical action today.
Yeah, I mean, anytime you're evaluating a stock for purchase, you want to see just good, solid earnings and sales increases in recent quarters, and you don't have that with Apple. In fact, it was the second straight quarter in a row where sales declined. So fundamentals a little bit iffy at Apple, but its market cap today did cross $1 trillion again, so it's still executing pretty well, being the mega cap that it is. But it's still holding above a buy point, and it got pulled down with some late selling in the Nasdaq, but overall a pretty good quarter.
All right, and elsewhere among tech stocks, we have Alibaba looking to get back in a buy range. It tried to break out today over an alternate entry, which resulted from a prior attempted breakout here. It did close about in the middle of its range, I think below the buy point here for Alibaba, getting pulled down with the broader broader market towards the end of the session.
Yeah, a lot of these stocks fading late, but Alibaba was strong for most of the session, along with Netflix. We didn't mention Netflix today, but that was another strong mover. But Alibaba, we're going to see earnings from them pretty soon within the next couple of weeks, so we'll probably see another strong quarter. We'll see if it can fuel continued price strength for Alibaba. But yeah, it tried to break out over an initial buy point of 188.18, then kind of moved sideways, and then you had an alternate handle area of 189.89, I think it is, and it closed. It broke out above that buy point and then faded with the Nasdaq. So managed a small gain, but overall kind of a disappointing close.
Yeah, that's right. Well, we'll keep an eye on Alibaba, but this goes to show you that just because a stock is not able to muster a breakout the first time around, some additional resistance there, as long as it doesn't trigger a sell signal, a new buying opportunity could present itself, but you still have to analyze that new opportunity and make sure it's up to snuff. And also the relative strength line here is still lagging, so it's something to consider as well.
Yeah, still lagging, but you can see the red line on Alibaba's chart. It's a 50-day moving average. Have been holding comfortably above that support level. So really not a stock in any trouble here, but again, just faded with the Nasdaq, and we'll see what tomorrow brings.
All right, and on the IPO front, we had Zoom staging a breakout today. It only closed with a fractional gain, though. Climbed above that $75 mark, but closed below the $73 mark. The buy point here was at $74.27, so it did close the day below this buy point here. But as always, we definitely want these IPO breakouts on our radar.
Yeah, definitely. And again, this was a disappointing close for Zoom Video. Not that, I mean, within the last hour of trading, it was all the way up near its session high, and it was looking like a really solid breakout from an IPO base. So it did close below the buy point, faded like all other stocks with the market here. But this is definitely one to watch. The strength in the IPO market in recent weeks has been well documented. There's a lot of, and we've been writing a lot about them at investors.com. A lot of stocks setting up an IPO basis. So Zoom Video is one, and if you just go to investors.com, you see a lot of coverage of the IPO market, and it's been pretty vibrant of late.
That's right, and I think this just goes to show you that we are in a confirmed uptrend, but even the strongest looking breakouts can get pulled down along with the broader market. So you always have to be aware of those external factors that could be impacting a stock.
Yeah, and always just keeping track of signs of institutional selling in the major stock indexes. Today was unequivocal selling. It got really ugly in the last 15 minutes of trading. Indexes ended with losses of around 0.6%, 0.7%. It looks like volume is going to be higher on the Nasdaq today, so there'll be another distribution day for the Nasdaq. But too early to throw in the towel here. We got still a lot of good stocks out there that are acting well, and
that we do.
Yep.
All right, everyone. Thank you for joining us today, and we hope you check out investors.com for all the latest stock market news and analysis. And we also have another episode of our weekly Investing with IBD podcast dropping tomorrow, so make sure you head to investors.com/podcast for all the details on how to subscribe. Mike Webster making a return to the podcast, and they might be talking about Zoom Video, because this week the podcast is all about how to handle IPO trades.
That's exactly right, and I'm sure there'll be a lot of interesting IPOs in this discussion.
Yes, a lot to discuss, and you can also check out our content across social media, whether it's on Facebook, Instagram, YouTube, or Twitter. Thanks again for watching, and we'll see you right back here tomorrow.